the market's too volatile right now for me to consider puts. And you can even see how they've gapped this market lower here. So what I would anticipate is, as I said, that's your atom. And then down the road, maybe we come down into here, then work our way back up. And if they could like calm the price down, get a nice trading range, volatility comes out of the market, the public's really not that interested anymore, that would probably set up this options trade. This week, we actually did long option strategies for the level 3 program. And the question was, is Coinbase ready to actually crap out and end the bull run? I mean, yeah, on a weekly basis, it looks like we're coming off here a bit. On a daily basis, oh, look at that. We got a little bit of a double top. But when we actually looked at the options information, the market was still saying that we're way too volatile to call a top here. So if we look at coin, for example, ideally, I want to do things like 50% retracements over the past year. So that would be here, February, March. So let's go off of that low there. So 50% is $160. If we went and priced like at least a 6-month put, let's say the 180 puts, then they need to be trading at like $10 for us to justify going in and buying that 6-month put. And right now you can see at the target, they would be worth $20. So what is a 6-month coin put going for right now? Is it going for $10? I think the answer is no. So there's September 180s, $22. So in essence, the 180s, the market is so volatile right now, up and down like a horse drawers. There's so much implied volatility premium built into this thing that even if we did go to the 50% rule, if you bought the put option, the 180 put, you would just basically get a scratch trade. There's just too much volatility here for us to call a top. And what do we typically want to see when we're looking for a top? Do we want to see straight up, straight down? No. What we really want to see, and David O is just a genius at this, is what we really want to see is we want to see like a Eve and then Adam. Or conversely, and maybe that's what this is, we want to see an Adam and then an Eve, like so. And it would be on this kind of price consolidation that spits up the Eve that the capital IV or implied volatility would bleed out of this thing and actually bring option prices down so that we could consider buying the 180 put and looking to make $20 on that and paying $10. Right now, the market's just too volatile. It's too expensive. So that's another reason why I don't really like the idea of shorting this. The crypto market right now is it's riddled with volatility. And if you look at the implied volatility premiums, they're through the roof. So in implied volatility, look at there, 80%, 90%. The S&P 500, I think, actually does look like a respectable short. But notice, look how low the implied volatility premiums are. Those are the kind of numbers that I do want to see if I'm thinking about buying put options. So I just another anecdote that I don't know whether I really like the idea of the short side of the market. The market's too volatile right now for me to consider puts. And you can even see how they've gapped this market lower here. So what I would anticipate is, as I said, that's your atom. And then down the road, maybe we come down into here, then work our way back up. And if they could like calm the price down, get a nice trading range, volatility comes out of the market, the public's really not that interested anymore, that would probably set up this options trade. So it's just an interesting side anecdote that, we are coming off here in the short term. And we've kind of talked about this with Bitcoin. I don't think Bitcoin's a short. And, cycle-wise, this is not the time of the cycle to be thinking short on Bitcoin. This is more like, pullbacks are buying opportunities. So I like the idea, and this is the same sort of thing. If you go and price put options right now, this is just too volatile. If I really do want to short and I want to call a top, I want this thing to pull back to the 13 EMA, then I want it to work its way back up and then put in a nice polite top and the volatility come out of the market. The moving average will move up like this, and then the slow moving average will come up. And ideally, what we'd love to see is a nice cross. And if we got that kind of event, the volatility would come out of the price. You get your Adam, and we often call this a Steve because Steve's got a bit of a package. It could just be an Eve. It could be a double top. But the really great trades I find, well, we also sometimes call this Olga too, because Olga's got kind of a lumpy butt. But hopefully you get the idea. I can't even really consider taking a trade through this because this is still a rip roaring bull, and we might not even get this kind of price action. Like what usually happens and what happened the previous cycle is, yes, you get your pullback into moving average support. Then the market actually jumps straight back up, and then we go like this, and then the market just grinds its way higher. So if you look back in 2015, 16, right, this is what I think is going to happen here. And you just never get your Adam and Olga or Adam and Steve or whatever the hell you want to call it. Because what ends up happening is you get your correction. So there's your Adam. And then the damn thing goes and just starts stair stepping its way higher. And you never do get that Eve. You get just a grinding bull that blasts to new highs. And that's what I think is going to happen. Am I really in a big hurry to short this? No. Do I think pullbacks are buying opportunities? Yeah.